you don't know where to begin, better ask Win.
Winston, good to see you. I'm glad we have time to talk today. We are going to discuss 3 financial planning and investment opportunities in a down market, which of course we are in right now. Recently, the U.S. stock market saw the biggest 2-day wipeout in history, $6.6 trillion. In fact, the market has lost $11 trillion since inauguration day. Now, before we get into how to take advantage of this, I do want to talk through something we've talked about before, which is the concentration risk that we're seeing in the market. 80% of the market's movement now due to only 10 stocks. To see that in a different way, this is a look at the S&P's 1-month performance. The Magnificent Seven alone have lost $2 trillion since the beginning of the year. So, Winston, when we see this much red on the board, what do we need to keep in mind?
I like to keep in mind perspective. The S&P 500, as you know, Erin, is really not a widely diversified portfolio, right? And that's this risk concentration we're talking about. But I do want to point to the fact that over time, the S&P 500 has done extraordinarily well, kind of a benchmark type of an index. And, you know, if you look back as recently as the COVID, March of 2020, when the sky was absolutely falling and the world was going to come to a certain end, we saw the single largest day drop in the S&P 500. Well, since then, from 2020 till about, you know, just the start of this new year, late 2024, the market was on a tear. 44,000 volume was the figure it got up to, and unheard of. Nobody would have believed that if you told them that. So kind of keep things in perspective when you start looking at all this red on the board.
It's good to be reminded of that because we are so emotional with our money. So let's talk through how to take advantage of this down market. Number 1, put your cash to work. It may feel better to hoard all of our cash in the mattress right now. But of course, if you do that, it really compromises your ability to build wealth. The blue mountain you see on the top here is the S&P 500. The middle, well, not middle, the lower to the bottom blue line is bonds versus cash, T-bills in black there.
Right. And the cash, you know, the art of investing says, avoid risk, right? Retain risk or transfer risk. Well, for those that are trying to avoid risk with money in cash, I want to make it clear you really never avoid risk, because if you miss the turn when the market starts coming back, you're not invested. Okay, you're going to miss out on all those gains. And that happens every time there's an opportunity to buy the dip. And what we really recommend to people, if you have cash sitting on the sidelines, this is a great time to take advantage of that, knowing what history says is going to happen. History tends to repeat itself, and you could win big.
Right. You are backed by data versus just being driven emotionally. It's good to hear
that.
No
emotion.
Right.
No
so
emotion.
Next, let's talk through another possible advantage, which is tax loss harvesting. This is taking advantage of our stock losses. How does this work?
Well, hey, you know, when we have taxes, right? We have long-term capital gains taxes, short-term capital gains taxes, taxes on our Social Security, taxes on our Medicare, tax. But if you liquidate some highly appreciated stock assets right now, you'll pay less taxes on them, and you can use those tax losses to offset gains that you have in other arenas. It's just a tax planning strategy.
That's good to hear. All right.
Yep.
And last, Winston, can you explain why Roth conversions make more sense in a negative market?
Absolutely. And it's just as simple as this. You've got a highly appreciated IRA account, 401k account, let's say. You have no basis, which means you've never paid any taxes on that money. When you go to spend that money, you are going to pay the taxes at that time. Or if you go to convert that money to a Roth IRA, it's the same thing as spending it. You're going to pay taxes on the amount that you convert. Well, if the values are down and you really don't plan on using that money for, say 5, 10, 15 years, what a great opportunity to take advantage of the down market to make that Roth conversion. Place that always taxable money now into into a never taxable bucket of money, and maybe really accelerate the growth on that, because a tax-free dollar will always go a lot further in the future than a taxable dollar. And then you pay less taxes.
I love that idea. It's so good to talk through these opportunities and hear that there's a silver lining to what we're going through right now. So Winston, if somebody wants to come to you for a financial plan that has this kind of volatility built into it, or if they just want to talk through any of these strategies, what's the best way to reach you?
Well, you can reach out give us a call at area code 602-456-1928, 602-456-1928, or visit us online at winstonandcompanies.com, and you can actually set up an appointment right there on our calendar.
Great. Winston, thank you.
Hey, thanks again for talking. Bye-bye.
Got a plan for your retirement, 'cause you know it's just down the road. But if you don't know where to begin, better ask when.